Good day, Lena. My name is Sibulu Mtunge. I'm a business studies teacher. Today's lesson will be based on investment insurance, which is covered in term 2 under the main topic, business ventures. Let us start with this topic and see what is it that we should know under business ventures. This topic is divided into 4 units or subtopics. Number 1 being insurance concepts and non-compulsory insurance, principles of insurance and the importance of insurance for businesses, types of compulsory insurance, benefits of UIF. So these are the subtopics that are covered in this lesson. Let's look at unit 1, which would be insurance concepts. You need to know the meaning of non-compulsory insurance. You also need to know, be able to explain the meaning of insurance, define the meaning of the following terms, concepts: over-insurance, under-insurance, average clause, reinstatement. You also need to be able to explain the difference between over and under insurance. You must also be able to differentiate between insurance and assurance, as well as to give examples of each. Now, let us start with the meaning of non-compulsory insurance. Non-compulsory, it means it is not compulsory. This type of insurance is not compulsory. Businesses have a choice whether they want to take out the insurance or not. For an example, it could be car insurance, it could be business insurance. You have a choice. Business have a choice whether they insure their assets or business cars. People have a choice whether they want to assess their cars or their houses. So it's not compulsory. It is not required by law. The government does not require people, force people to take out an insurance. But it is important because it provides protection for businesses and individuals. So it is, even though it's not compulsory, but it is important for people to have insurance because it provides protection. How does it happen? It is take out in order to transfer the risk. Businesses take out an insurance in order to transfer the risk to the insurance company. What kind of risk are we talking about here? We talk about risks such as fire, property can catch fire, burglary. We're talking about burglary theft. We're talking about money in transit. If they're moving the money, we are talking about different kind of risk that pose a challenge to businesses. Therefore, this risk must be transferred to the insurance company. If it happens, then they can be indemnified. I'll explain the meaning of indemnify later on. Non-compulsory insurance, Lena, is divided into 2 aspects. We've got long-term. We've got short and long-term insurance. It is important that you remember that long-term insurance, such as retirement annuities, such as life cover, life assurance, disability policies, those kind of policies, they fall under the non-long-term insurance, and they are not compulsory. They are still non-compulsory. I have to emphasize this, Lena, because every time you are asked to discuss the compulsory insurance, then many candidates will say long-term insurance. Long-term insurance, it's not a compulsory insurance, but it is a non-compulsory insurance, as well as the short-term insurance. What are examples of short-term insurance? Fire, theft. Those are like the one that I've mentioned, burglar, all those, they fall under non-compulsory insurance. Now, let us look at the meaning of insurance. Insurance covers what? A possible event. It is important that you know that it covers a possible. What do we mean possible? By possible, we mean an event may. The event may or may not. It may or it may not happen. For an example, a business can cover its assets, a property. that against fire. Fire may happen or it may not happen. You cover it against theft or burglary. There may be a burglary or it may be. So it's possible event that may cause a specified loss. It is important to note the word specified. So why is it important to know that possible event that is specified where? In an insurance contract. So an event must be specified. For an example, if a business wants to insure its property against fire and theft is a risk that is specified in an insurance contract. And if, for an example, something happens to the business property is destroyed by storm, then the insurer is not going to pay out. Why? Because the event is not specified. So the word specified will be used a lot in this topic. An agreement whereby an insurer, what do we mean by insurer? An insurer is the insurance company. Insurer, this is an insurance company. Can be Holland, Old Mutual, all those. And then the insured, these key words you must know. The insured is a person or a business. It can be a person or a business. A person who's taking out an insurance. What is this? It's an agreement between the insurer and the insured. What is this agreement based on? The insurer is going to indemnify. Indemnify. What is to indemnify? To indemnify is to make good, pay back. Should an event that is specified in an insurance contract occurs, then the insurer must indemnify the insured, pay back. Now, what is it that the insured must do in return? The insured must pay a premium. Pay a premium. A premium is a monthly installment that must be paid by the insured to the insurer for carrying the risk. Remember, we said that the insured transfer the risk to the insurer. Therefore, it can't be done for free. They'll have to pay a premium so that if that risk takes place, that event takes place, specified event takes place, that is stated in the insurance contract, then they can be indemnified. So it is important, Lena, that when you define the meaning of insurance, the key words such as insurer, insured must be there in your definition. The words such as indemnify must also be there. Words such as specified loss must also be there. Now let's look at the meaning of over insurance. What is over insurance? The word over, it means more. This is where an item is insured for more than the actual market value. Give an example. A building is insured for 400,000. Right? The building is insured for 400,000, and it is the market value of the building is 500,000. The building is destroyed by fire and the damage is cost 80,000. What is going to happen here? What is going to happen here? What is going to happen is that the insurer is not going to pay the full amount, is not going to pay the insured money back, but instead they will replace the property. Why? Because it is over-insured. They are not going to pay 500,000. No, they will pay 400,000. Why? Because nobody must make a profit out of insurance. So the principle is that the insured must be put in the same position he or she was before the event occurred. Business will not receive a payout larger than the market value of the loss. This means that the extra money that was paid or for the premium will not be paid out if the claim is lodged. Now, let's look at the meaning of under insurance. Under insurance is an opposite of over insurance. What is it? It happens, it occurs when property or assets are not insured for their full value. We are going to use the same example or another example that here the building worth 400,000, but it is insured for 300,000. Then it means it is under insured. What is going to happen here? The asset, seeing that it is under insured, it means that the insurance will not pay the full amount of damage if the building catches fire or any type of risk that has been insured. If a business is insured for amount that is under the actual market value, the business will not be paid out for the amount of the full value. The insurer usually applies the average clause. Usually applies the average clause. What is the average clause? An average clause is a stipulation set by the insurer, which is applicable when property or goods is insured for less than its market value. This means that the insured is responsible for a part of the risk that is not insured. Meaning that if the damage or loss amounts to 40,000, then they will do their calculations. Then an insured will not receive 40,000, will receive less than that. Why? Because the building or property was under insured. So let us look at how insurance companies calculate the average clause. This is how they calculate the average clause. It is the amount insured divided by the value of insured item, the formula, times the amount of damage. For an example, Peter owns a attached house valued at 100,000. He insured his house with Procover insurance for 80,000. Can you see already that this property is underinsured because the market value is 100,000 and yet it is insured for 80,000. A fire in the kitchen caused damage of 30,000. Let's see how the insurer will calculate, or Procover insurer will do their calculations. We take the amount, the formula is amount insured. We start with the amount insured, which is 80,000, divided by 100,000. 100,000 is the value of the property, times 30,000. So it means Peter will only receive 24,000 instead of 30,000. Why? Because the building is underinsured. So what does it mean by average clause? It means that part of the risk is carried by the insured. So under insurance is actually, average clause is applicable when goods are under insured. Question is, what happens if the property is over insured? What is it that the insurer will do? This is what the insurer will do. They will reinstate. Let us look at the meaning of reinstatement. Reinstatement is a stipulation whereby the insurer may replace the lost or damaged property instead of reimbursing the insured. Meaning that now, here, like I mentioned earlier on, that the insured is not going to get the money, but they will instead replace the building or rebuild the building. If it caught fire, this stipulation is applicable when goods are over insured. The reinstatement value will not be higher than the market value, meaning that they will not, if the house was 500,000 and it catches fire and you insure it for 600,000, regardless of the amount of money you're paying premium, you will receive the same. They will replace the property at the value of at the market value of 500,000 instead of 600,000. It means here the insured is losing out. The insured is returned to almost the same financial position as before the loss occurred. Nobody must make a profit out of insurance. That is why the insured is returned to almost the same financial position he was or she was before the event occurred. Now, if I have to summarize these 4 concepts, one would argue that if you look at over-insurance will then will go hand in hand with reinstatement. So you cannot separate over-insurance with reinstatement. When goods are over-insured, insurer does not pay out, they simply replace. Then we've got under-insurance. Under-insurance, when goods are insured, property are insured for less than their market value, what will the insurer do? They will apply the average clause where they do their calculation. Remember the formula for average clause? Amount insured. It's amount insured divided by the market value times the damage. So if you know, learners, these four concepts, it will be easy for you to understand every content aspects that are going to be I'm going to deal with in this topic. Now let us look at the examples of long and short-term insurance. What is short-term insurance? Examples can be property insurance, theft, burglary, fire. Why are these regarded as short-term? Because the event may or it may not happen. It's coverage against possible loss. It's taking us back to the meaning of insurance, where we said it covers possible loss. So property theft, there can be burglary, there can be fire. So those are examples of short-term insurance. Then let's go to examples of long-term insurance, such as endowment policy. What is endowment policy? It's a policy that is taken out at an early stage that will pay when a person reaches a certain age or retires. So why is it long-term? Because the payout is going to be done after a very long time. You might finish matric and get employed, decide to take out an endowment policy that must pay out at the age of 55 or 60 years. In that way, it's long-term. Then we've got life insurance, where it's going to pay out when a person dies. Then we've got retirement annuity, pension fund, disability policies. All these are classified as examples are classified as long-term insurance because payment is going to be done after a long-term period, and it is guaranteed. Now let's look at differences between insurance and assurance. Now, Lena, let us look at the principle here. Here we've got 2 principles. Insurance is based on the principles of indemnity. It is important that you note this principle, which are used to differentiate insurance and assurance. Remember, I did mention earlier on when I was defining the meaning of insurance, that indemnity. What does indemnity mean? Payback or compensate, make good. So under insurance is that if fire or theft occurs, that is specified in an insurance contract, what is going to happen? The insurer will pay back. Assurance, the word assure, what does it mean? You are rest assured. If the event takes place, the insurer is going to pay. Hence, it is called assurance. It is guaranteed. What are the examples of a principle of security, such as retirement annuity? You are going to reach a certain age one day, they are going to pay. Such as life assurance. You are going to die one day if you've taken out a life insurance, therefore the insurer will pay. That is why it is called assurance. It is guaranteed, they will pay. It's a principle of security or certainty, meaning that sure, it's based, it's guarantee. Then we've got insurance covers a specified event that may occur. I did say that insurance is based on the possible loss against an event that may appear and that may happen or may not occur. Note, the word specified, it's very important because sometimes when candidates are asked to differentiate between insurance and assurance, the majority of learners, right, it covers event that may occur, but that specified, it's not there, then you're not getting a mark because it's not an event. If you say it covers an event that may occur, you are saying it can cover any event. No, the event must be specified where in the insurance contract. Same as with assurance, specified event covers a specified event that is certain. Can you see here? It may occur, but under assurance, the event is certain. Why certain? You are going to reach a certain age. You are going to die one day. Therefore, it is certain. But the time of the event is not known. Nobody knows when one is going to die. But if I've taken out a life insurance, when I die, it will pay out. Hence the word, the sentence, the time of the event is not known. Now, insurance is applicable to short-term insurance. Assurance is applicable to long-term insurance. Now, it will take us back to the examples that we have, the examples of short-term and long-term. So all these examples of short-term insurance would be under insurance. And all these examples of long-term insurance will be classified under assurance. Let's look at how you'll be assessed on these concepts. Examiners may ask you to elaborate on the meaning of insurance and average clause. Here, you are supposed to explain the meaning of insurance. You can use simple sentences or you can go a long route, but as long as you are able to elaborate to get 6 marks, because the verb elaborate, it means go beyond definition. It means that don't just give one statement, give more. Hence, in our first slide, I explained 3 definition points on how to define insurance. In case you are asked to elaborate, then you are able to give more responses. And you are also going to be asked to elaborate on the meaning of average clause. I am advising you, learner, if you are asked to elaborate or define average clause, don't confuse average clause, the definition of average clause, with the definition of under insurance. Average clause, you can't say it's when goods are insured for less than their value. No. You are going to say that average clause is a stipulation that is used by it's a clause that is used by the insurance company to calculate the amount of loss that must be paid to the insured. And you say it is usually applicable when goods are under insured. Then give a formula of under insurance and to calculate under insurance. Then you give the formula of average clause. You're getting 6 marks for that. So it's actually easy mark that you can get. So it can come in a form of calculation, average clause, or if in a form of explanation, define the meaning. Or examiners can decide to give you a formula, a scenario, then you are required to calculate the average clause. Explain the difference between the following concept, over insurance and under insurance. We have done that. Can you see the mark allocation? It's 8 marks. It's actually a lot. So you must be, to be on the safe side, know 2 facts under each concept, over insurance and under insurance. So you must just ensure that you define them very well. So very easy, learner. It's easy. You can say this one is insured for more than. Don't say it is over-insured. Once you say the property is over-insured, you are repeating the concept. Say it's when property is insured for more than their actual value. Under insurance, don't say it's under-insured. You are repeating the concept. It's insured for less than, for you to give examples of each, then for you to get 8 marks. Then assurance and insurance, which we have explained, is 8 marks. You must also give examples of short-term and long-term. And learner, to advise you, if you know the examples of short-term and long-term insurance, you already know some differences between assurance and insurance because they are embedded in those examples. You may also be required to calculate the average clause from a given scenario. Now, let us look at Unit 2 now, Principles of Insurance. We have started with our principles. We've started with indemnity and security when we did our the difference between insurance and assurance. So I did introduce you to the 2 principles. We actually have 4 principles of insurance. We've got indemnification, which you must know. We've got security, which I've touched on when I was doing the differences between insurance and assurance. We've got principle of utmost good faith. We have principle of insurable interest. These are the things that you should know at the end of this Unit 2 learning outcome. We're also going to deal with advantages as well as advantages or importance of insurance for businesses, not individual. In business studies, we are looking at why is insurance important for businesses, not for individuals, because this is about business studies. Explain the meaning of insurable and non-insurable risk. Now, let us start with the principles of insurance. I'm going to just recap in terms of principles of indemnity. Remember, what did we say? We said principle of indemnity. This is where the insurer undertakes to indemnify the insured. It applies to short-term insurance as the insurer is compensated for a specified event. Can you see, Lena, the word specified, it's coming again. It means that indemnification, the payback money, will only take place only when the event is specified, where in the insurance contract. Insurer agrees to compensate the insured or pay the insured for damages, losses specified in the insurance contract. Can you see, I did say that, mention that the word specified, it's key in this topic. The specified event, then they will pay. In return, what must the insured do? It must pay, the insurer must pay the premium. The insured must pay the premium. So if you look at the principle of indemnity, you will see that it's taking us back to the definition of insurance. If you understood the definition of insurance, it's easy for you to understand the principle of insurance because it's based on the contract between the insurer and the insured, where the insurer will indemnify the insured and what will be the insured do pay the premium. But on the happening of a specified event, it's taking us back to the definition of insurance. And also it protects the insured against a specified event that may occur. Let's look at the principle of security, which we have done already when we were busy with the difference between insurance and assurance. Security, remember we said it's applicable to long-term insurance. Can you see? It's just the recap now, where the insurer undertakes to pay out an agreed amount in the event of loss of life. That is life assurance. A predetermined amount will be paid out. When the insured reaches what do you mean a predetermined amount? It's security. You take out an insurance that worth 1 million rand, that when you reach the age of 55, the insurer is going to pay out. Then when they pay out, then you know that it's security. That is why we say it's a predetermined amount, because it's the money that you know you are expecting and you are paying premium so that when you reach that particular age, you would receive that amount. Aims to provide financial security. Why? You'll wonder why security? Why security? Because the insured wants to have financial security at retirement, or when the insured dies, then at least the dependents of the deceased of the insured would benefit from this insurance. Utmost good faith. The word utmost is very important, learners. Don't say good faith. That is now our third principle. Utmost good faith. Absolute. 100% honesty. So do not miss the word utmost. It has to be written here. Good faith in full. If you say good faith, you're getting 1 mark. But if you say utmost good faith, you're getting 2 marks. Insured has to be honest in supplying details. That is why it is called utmost. Honesty. the insured has to be honest in supplying details when entering an insurance contract. I'll give you an example. Here I am, I'm taking out a car insurance. I'm asked, where do you park your car at night? Then my answer is, I parked it in a locked up garage. Then my car gets stolen. And when the insurer investigates, they found that I did not have a locked up garage and I did not have the gate. So the car was not safe. Therefore, it's not utmost good faith, no payout. Both insurer and insured must disclose, meaning must reveal. They must reveal or disclose all relevant facts, meaning that both sides, both parties must not lie. The insurer has an obligation to say what is it that is covered and how are they going to pay, and the insured must give all information. Insured must disclose everything that may affect the extent of risk. Why is this important? It is this risk that enables the insurer to calculate the premium. The higher the risk, the higher the premium. Why people lie, it is because they don't want to pay high premium. That is why they lie. And when the insurer investigate, then they will find that the contract was not of utmost good faith, therefore no payout. Information supplied when claiming should also be accurate. Where did the accident happen? It happened in the morning where you're going to work, yes. In the meantime, it happened after work, you were drunk. That is why. So you are claiming, but you are not providing accurate or true information. Therefore, claims won't be paid. Insurable interest. This concept, it's a bit complicated for many learners, but I'll try to simplify it in a manner that you'll understand it. The insured must prove that he or she will suffer financial loss if the insured object is damaged. I'm going to make an example. Here is my husband. Easy, and easier. Here is my husband, who is a manager somewhere and gets paid a lot of money. And I'm the wife. I depend on my husband for income to support my kids and for my household stuff. Then my husband becomes my insurable interest. Why? Because I will suffer financial loss if this person is destroyed or dies. Therefore, my husband will be the reason why I will take out an insurance contract. Another one, businesses, property. A business property is a businessman will have an insurable interest over his or her business. Why? Of his business. Why? Because he gets income from this business. And when this business is destroyed by anything, then he loses out. That is why we say insured must prove that he will suffer a financial loss. If one cannot suffer a financial loss, then there's no insurable interest. Insurable interest exists because an insured will suffer a financial loss if the object is destroyed. And an insurable interest must be expressed in financial terms. No financial loss, no insurable interest. But if there is financial loss, then there must be insurable interest. Insured must have a legal relationship. Learner, this is very important. You can't decide to insure your neighbor when the neighbor who is terminally ill. You can't, because you don't have a relationship with your neighbor. There must be a legal relationship with the object insured. It must be your relative, it must be your family, your car, or whatever. But you can't insure somebody else's car. It has to be yours. There must be a legal relationship for the insurance contract to exist. Now let's look at the advantages, importance of insurance for businesses. Please note, for businesses. What is it? What are the advantages? The insurance transfer the risk from insured to insurance company. Businesses transfer the risk from the insured to an insurance company, right? We did say that's a reason why we take out insurance, to transfer the risk. The transfer of risk is subject to terms and conditions of the insurance contract. This now it's important. What do we mean by the transfer of risk? Who is transferring the risk? Is the business. It's transferring the risk to who? To the insurer. And this transfer is actually subject to terms and conditions of the contract. What are the terms and conditions? Utmost good faith. It's taking us back to the principles of insurance. Utmost good faith, terms and conditions. Disclose all relevant information. Insurable interest is one of the terms and conditions. Have a legal relationship. And it's also taking us to what? Indemnity. They must indemnify. So the transfer of risk is actually subject to terms and conditions. Terms and conditions, think of the 4 principles of insurance that actually forms the basis for insurance contract. Without those principles being adhered to, then there is no insurance. Protects business against dishonest employees. What do we mean by dishonest employees? These are the employees that are dishonest. They will steal money or they will steal stock. That stock is usually insured, so that when the theft takes place, then the business may claim from insurance. Note, Leonard, this does not encourage you to steal, do shoplifting, because the business insured the stock. So this is not allowed and encouraged, in fact. Protects business against losses due to the death of a debtor. Who's a debtor? A debtor is a person that owes business money. You take out a loan, then it means that that loan must be insured, so that when a debtor dies, then the insurance can pay the business. It also protects the business against theft or loss of stock caused by natural disaster. Can you see theft, insurable loss, a risk that we have mentioned? So it's against theft or loss of stock caused by natural disasters. Now, Lena, please note, there are many advantages and importance of insurance. For the sake of this lesson, we decided to only look at 5 that can give you the easiest one. That can give you 8 marks or 10 marks. But you are encouraged to further refer to your textbooks and to your notes on the more additional importance of insurance, and or take note of the order. The first 2 bullets, keywords transfer. The last 3 bullets, protects. And all 3 of them, they protect who? Business against. So the first point of departure of these 3, the last 3, you'll know that insurance protects business. So you just need to remember the nature of the sentence or the fact that dishonest employees against loss, against theft, for you to easily recall your facts. The meaning of insurable and non-insurable risk. What do we mean by insurable risk? These are risks that are insured by insurance company. Risks that can be insured, such as what? The one that we've mentioned, such as fire, theft, burglary, fidelity insurance, money in transit, all those are risks that can be insured by insurance companies. Insurance companies decide the likelihood of an event, and they also decide if they want to insure the risk. So, for the sake of this topic, the focus is more on insurable risk that can be insured, such as fire, burglary, the ones that we've mentioned. Then let's look at the meaning of non-insurable risk. These are risks that cannot be insured by insurance company. Why? Because this risk, the cost of insuring this risk are very high. The insurance company cannot even calculate the profitability of the risk. And they can also, therefore, they cannot work out a premium for this business. Therefore, these risks cannot be insured. Let us look at the examples of such risks that cannot be insured. Non-insurable risk. What are the examples? Changes in fashion. If the insurer can decide to insure this, then they would lose. Because fashion changes all the time. So it can be insured. Changes in technology, it can be insured. Irrecoverable bad debts, they can be insured. Shoplifting during business hours. Why? Because the business is expected to take precautionary measures during business hours. So if shoplifting is happening during business hours, it's not going to be insured because there's supposed to be all safety procedures and security must be tight during business hours. There's also possible failure of a business. All these risks can be insured. Which risks can be insured? Insurable risk, theft, fire, burglary, natural disaster, they can be insured. So basically, what you need to know under examples, you may be asked, examiners may ask you, define, elaborate on the meaning of non-insurable risk and give 3 examples. Or you may be asked to elaborate on the meaning of insurable risk and give 3 examples. So it is not enough for you to only know the examples of insurable risk and non-insurable risk. However, you have to be able to define what is the meaning of insurable risk and what is the meaning of non-insurable risk. Let us look at assessment on the principles of insurance. Remember, we said we've got 4 principles of insurance. We said we've got 4 principles of insurance. Here are they. We said it's indemnity, security, utmost good faith, as well as it's indemnity, security, as well as insurable interest. These are our 4 principles, just to remind you of what we have done. Now let's read the scenario and see what is it that the scenario requires. We need to read the scenario with an understanding before we attempt answering the question. And we also, it is advisable that to preempt what the examiners will ask. It's important. Jenny Properties, JP. Jenny Properties insured her business property against fire and theft. So already we can see that the event is specified. It's fire and theft, and it will fall under the short-term insurance. Jenny signed an insurance contract with who? TDG Insurers. Jenny was informed that she will be compensated only if her property gets damaged by fire and theft. Why? Because the event is specified in the insurance contract, fire and theft. So the compensation or payback will only be made only if the property gets damaged by fire and theft. Jenny disclosed, revealed everything that may affect the extent of the risk. Now, if we look at this scenario, we can already see that we've got 2 principles that we have identified. Let's look at the question. Identify 2 principles of insurance that are applicable to the scenario above. Motivate your answer by quoting from the scenario. Let's go back to the scenario and see. We've got 2 principles. Which one? What is number 1? It is this one. It's a principle of indemnity or indemnification. Why? Because business property, she insured the business against fire and theft. And also she was told that she will be compensated only if her property gets damaged by fire and theft. That is indemnification. Jenny will only be indemnified, paid back, only if her property gets damaged by fire and theft. That is the principle of indemnification. Jenny also disclosed everything that may affect the extent of the risk. What principle is that? Utmost good faith. Because Jenny revealed everything, gave all information regarding the extent of risk. So the principle that applies here will be principle of utmost good faith. And remember, Lena, when you are asked to quote, you have to give the principle and quote. But the trick, let me show you how you would be marked. Here, it's a principle, and here, it's a motivation. So if you say indemnity, principle of indemnification or indemnity, you need to quote as is from the scenario. Why? That Jenny will be compensated if the property gets damaged by fire and theft. Then you say utmost good faith. Then motivation. But if you are not going to give the principle, write the principle, you simply write the motivation without identifying the principle, you are not getting a mark for motivation. So meaning for you to get a mark for motivation, the principle must have been correctly identified. That's how it is marked. So you must attempt. Same as if you decide to give an incorrect principle and you write the motivation, you're still going to be marked incorrect because that motivation, it's not for that particular principle that the examiners are requiring. So basically what I'm trying to say is that every time, all questions in the exam, when they say motivate, you have to quote directly from the scenario, and that particular concept that you need to name or you need to identify must be relevant to the scenario for you to get the mark on the motivation. Explain other two principles of insurance. Here you are, you've explained the two. Now, what are others? Others will be insurable interest, the one that we've mentioned. Others will be principle of security. These are other two. Right, you'll get a mark. But many candidates are losing marks because in business studies, negative marking is not applied. What do we mean by negative marking? Say, for an example, with this one, what you've done, you incorrectly identify the principle from the scenario. For an example, you mentioned that it's insurable interest. The next one, you said it's utmost good faith. So these are the ones that you have identified. In the first question, it's wrong. And obviously, motivation also becomes incorrect. Then other principle, here you are now. Now you say indemnification, utmost good faith. It is incorrect. Why? Because these two are applicable here. You were supposed to write it in the first question. So the follow-up question depends on the first question. If the first question was incorrect, you can't take it and say, oh, I've identified two, the other two. So it is important that you must read the scenario with an understanding, analyze it before answering the question to avoid losing marks, especially when follow-on questions are asked. Right, let us look at assessment on insurable and non-insurable risk. Read the statement below and answer the questions that follow. Insuring assets against theft, damage, fire, and burglary is essential for every business. Business should plan carefully for risks which are not insurable. Now, obviously, when you look at this, we see that examiners might ask us questions on insurable risk and non-insurable risk. Why? Business carefully risk for which are not insurable, plan for risk which are not insurable. Quote 3 examples of insurable risk from the scenario above. 3, quote, meaning you must quote from the scenario. What are they? It's theft, damage, fire. There are actually 4, but examiners are asking for 3. Now, say for an example, here you are writing 4. You write all of them. You say theft, damage, damages, you say fire, burglary. Marking principle, we mark the first 3. This one we cancel because you were asked to give 3. So even if sometimes the last one, maybe you decided to quote an incorrect thing that is not even in the scenario. You say money in transit. Money in transit is not there. It's not in the scenario. But you decide to put your own words, which are not in the scenario. Then you say burglary. Then you say damage. And then the one is theft. All these are there. But what is the problem? How are we going to mark you? We'll mark first, second, 3. First 3. Money in transit, wrong. Burglary, correct. Damage, we are not marking. Why are we not marking the damage? Because the number of facts is specified. Name, code 3. Therefore, you're not getting more. So in all exam papers, in business studies, when the number of facts is specified, you must write those that are specified. If the question asks for 4, you give 5. Just write 4, not 5. And also, because you're wasting your time as well, you might not even finish writing because you're not carrying instructions. Explain the meaning of non-insurable risk, which we have done. Here, they don't want, the examiner does not want an example. The examiner only is requiring for the explanation of non-insurable risk. Discuss the importance of insurance. Can you see, Lena? It's 8 marks. So you already know you've got 2 keywords: transfer of risk. You've got another 3 keywords: protects businesses against. Protect businesses against. Then you need to complete the sentence. So it's easy for you. If you understand this, then it's easy for you to do well in this subunit. Now let's look at our last unit, which is unit 3, types of compulsory insurance. Now, what are the outcomes? In this unit, you must be able to elaborate on the meaning of compulsory insurance. You must discuss 3 types of compulsory insurance. You must also be able to explain the types of benefits that are paid by the UIF. Now, let us look at types of compulsory insurance. We've got 3 types of compulsory insurance. We've got the UIF, Unemployment Insurance Fund. We've got the Compensation Fund, or COIDA. We also have the Road Accident Fund, or the Benefit Scheme. Now, we are going to start with unemployment insurance, UIF. What is it? The UIF provides benefits to workers who have been working. And Lana, it is very important that you know that this one, who have been working. UIF does not provide benefits for any person. Otherwise, it means every person that is unemployed must go to the Department of Labor and claim for UIF. It's only for those workers who have been working and contributing to the fund, right? And they become unemployed for various reasons. And how is this the benefit funded? Employees contribute 1% of their basic wage to UIF, and the business also contributes 1% of the basic wages towards UIF. So what does, at the end of the day, both the employer and the employee contribute 2% of their percentage to UIF. So its contribution comes from both sides. All employees who work at least 24 hours per month are required to be registered for UIF, contribute to the UIF. And businesses are required to register their employees with the fund and to pay contribution to the fund. Now that it's COVID-19, during the lockdown period, many businesses were closed down, and employees were not getting any income, and they were advised to claim from UIF. That is why we have numerous reports from media to say that some people did not receive their UIF because when they checked with the Department of Labor, they were not registered. Therefore, it means that employers were deducting the 1% but not paying it over to the Department of Labor. It is therefore important that when employees are working and contributing to UIF, they have to check with Department of Labor if the employer is actually contributing to avoid such challenges when they need to claim. Now let's look at types of benefits that are paid by UIF. Note, Lena, do not confuse these benefits with provisions of the BCA. I'm saying this because many learners are doing that, provisions of the BCA, the Basic BCA, the Basic Condition of Employment Act. Do not confuse it with provision. Here, we're talking specifically to benefits paid by UIF. Unemployment benefit. And it's easy mark because for you to just name the benefit is 2 marks, for explaining it's another 2 marks. Employees who become unemployed or retrenched due to reconstructuring or an expired contract. That's an unemployment benefit. Tax is not payable on unemployment benefit. That is just the nice part of it. That's illness benefit, sickness. When a person is sick, then they are entitled to this benefit, which is paid by the UIF. Employees may receive this benefit if they are unable to work for more than 14 days. This is very important, Lena. They must be unable to work for more than 14 days without receiving a salary. You can't get sick for 5 days or 6 days or 3 days, then you go to UIF and say, I was absent from work for 2 days because I was sick. You can only claim from UIF only if you were sick for more than 40 days without receiving a salary or part of your salary. Employees may not claim this benefit if they refuse medical treatment. That is very important, because if you refuse within that 14 days, you were given medical treatment, but you refuse to take medical treatment. Therefore, you are not going to receive it. You are not eligible to be paid. Right, the next type of UIF benefit is the maternity benefit. Pregnant employees receive benefits up to 4 consecutive months. 4 consecutive months without a break in between. Only pregnant employees can receive this 4. It is called maternity benefit. Please, Lena, don't write maternity leave, because maternity leave is a BCA provision. But here we're talking about UIF. UIF, it's a benefit. So the word benefit, it's important. Same, right? Maternity benefit. Because once you write maternity leave, everything is incorrect. So it has to be benefit. If an employee had a miscarriage or is stillborn, she can claim for up to 6 weeks or 42 days. Adoption benefit, this is a benefit that is received by employees who adopt children, or an employee who can adopt a child younger than 2 years. That younger than 2 years is important because that baby is still a baby, so you are entitled to it. Employees who take unpaid leave may claim for UIF caring for the child at home. And also, Lena, you are also advised to research further on maternity benefits as well as adoption benefit according to the new Act now, latest development in the Act. Dependent benefits. Dependent benefits may apply for these dependents if the breadwinner, who is a breadwinner, is a provider, sole provider at home, the person that takes care of the family needs and all that, who has contributed to UIF. If that person dies and has been contributing to UIF, then his or her dependents are entitled to this benefit. The dependents of the deceased may claim whether they are employed or not. Whether you are employed or not and your relative or your family has been contributing it, you have a right to claim. It's not actually paid to people that are not employed, but whether you are employed or not, but if your family member passed away and they've been contributing to AF, then you are entitled to this benefit. So now, let us recap a little bit on types of benefits paid by UIF. I'm recapping learners because it's actually a lot of marks. You can actually obtain 14 or 16 marks for this, because for unemployment benefit 2, for explanation 2, if it's asking a section C essay type question. Illness benefit 2 mark, 2, but you need to know the explanation. Many candidates, what they are doing, they memorize the types of benefits without looking, without being able to explain. Memorize it, it's fine, but the explanation so that you can get more marks. Also, why is the explanation important here? Also, when you have to answer it from the scenario, if it's asking section B, if examiners decide to ask types of benefit, assess types of benefits in a form of a scenario. So and then the question will be, identify the UIF benefit applicable to the scenario. So you need to be able to identify. So claiming, memorizing the benefits without gaining insight into their meaning, it's not going to help you. Maternity benefit, adoption benefit. So there are 5 benefits that you should know, as well as the explanation to get better marks, right? Now let us look at the second type of compulsory insurance. Lena, as you can see that if we look at the high impact content here, if you can look at we can see that UIF as a compulsory insurance is very important, because you've got explanation that you must know. You need to explain what it is, and it also has types of benefits. So This one, if you understand it very well, then it's easy for you to obtain marks, because examiners may sometimes ask you to explain what is UIF, give explanation for 6 marks, or examiners can sometimes ask you to discuss 4 types of UIF, 4 types of benefits paid by UIF, which would be 4, 8, 12, 16, if it's asking an essay question. So it's actually a high impact content. So you are advised that you need to understand this one correctly before you go into the next type of compulsory insurance, which is now the Road Accident Fund. Or now recently it is called Amended Road Accident Benefit Scheme. So if you write this, it's okay. But if you Google it, you will see that now it's the recent one with recent information. It's Road Accident Benefit Scheme. RAF or RAPS insures road users against negligence of other road users. This one is for people who are involved in accidents. So it involves both the road users, people, as well as the drivers, negligent drivers. RAF or RAPS is funded by a levy on the sale of petrol or diesel. You might ask, how is it funded? Every time when people put petrol in their cars, a certain amount goes to the road accident fund so that they pay out in an event that there are accidents. The next of kin of workers or breadwinner or family member who are injured or killed in the road accident may claim directly from the RAF. Why are we paying as drivers? Because we don't want, if you're involved in an accident, we don't want to pay the person that has been in, that is injured, but rather that person must claim from the road accident fund. So that's how it comes in handy. Injured parties and negligent drivers are both covered by RAF. Not only the injured party is covered, it's even with the negligent driver. Negligent driver is just a term, an academic term, that is being used in this act or compulsory insurance, that we are regarded as negligent driver. When you are, whether you are correct or not, you are regarded as a negligent driver, because they would say you could have easily avoided the accident. So it covers the drivers as well if they get injured, whether they were correct, wrong, or right in the accident, but they are still covered. That is just the benefit of this RAF. Now let us look at the third type of compulsory insurance, which is compensation fund or compensation for occupational injuries and diseases. Learners, you must know, do not confuse this with an act called Compensation for Occupational Injuries and Diseases Act that you have done in term 1 under legislation. Here, CODA is coming back again, but as a benefit, but instead of an act, as a compulsory insurance that must be paid. In term 1, you did CODA as an act, but in term 2, we're doing CODA as a compulsory insurance. Let's see, what is it that we look at? Let's zoom into how CODA benefits both the employer and the employee. So let's look at how does this benefits the employer and the employee. The fund covers occupational diseases and workplace injury. That you know already. That is why it is called compensation for occupational injuries and disease. Why? Because it covers occupational disease. You might contract asthma, TB, or pneumonia because of the work condition or workplace. Now it's COVID-19. Some will be saying they are going to if they get sick, contract the disease, then they can claim. And also workplace injuries, depending on if they were protective gears and all that. Compensate employees for injuries and diseases incurred at work. The fund covers who? Employers. How? For any legal claim that workers may bring against them. So if the worker is injured in the work while performing duty or contracted a disease while performing duty, then they cannot claim from the employer, but they would rather claim from the fund, compensation fund. or COIDA. Employers are responsible for contributing towards the fund. Who must contribute? It is the employer, this one, not the employee. Employees do not contribute to COIDA, but the employer contributes to COIDA, and they may not claim money back from employees or deduct it from the wages. So note, Lena, with COIDA, no contributions are made by the employee, but only the employer must contribute towards the fund. In the event of death of the employee, what's going to happen? As a result of work-related accident, an employee died while performing his or her duty. What is going to happen with the deceased? The money will be paid over to his or her dependents for financial support. Now, let us look at how you'll be assessed on compulsory insurance. Examiners may ask you to identify the type of insurance applicable to each statement below. Identify. Kadi will receive compensation for losing her job due to the restructuring of the company. What kind of insurance, compulsory insurance is this? It is unemployment insurance fund. Why? Because Clary is going to be compensated for having lost her job. And then the next one, Levy will be compensated for serious injuries he sustained in a taxi accident on his way to work. What is that? These serious injuries, note, when Levy did not contract a serious injury, sustain serious injuries at work, but serious injuries were sustained where in a taxi accident. What kind of insurance is this? It will be RAF, the Road Accident Fund, or RAPS, right? Discuss 3 types of benefits covered by unemployment insurance fund. I already indicated that these benefits of UIF actually has a lot of marks, because why? You have to name and explain. So 3, this is section B, that's why it's 9 marks. But if this question was asked in section C, it would have been 4, 8, 12. It should have been 12 marks. Let us look at the essay question on this topic. Mr. Funa is an insurance broker at Smartsurance. He has to present different types of insurance products. So the essay is about insurance, because why? Mr. Funa must present different types of insurance products at a meeting of local business owners. And what is it that is expected, this Mr. Funa? He's expected to convince potential clients on the importance of insurance. Let's see. Write an essay on the following. Distinguish between compulsory and non-compulsory insurance. Easy already. You know that compulsory is what? It's not, it's compelled. Businesses are compelled. They are required by law. Whether they like it or not, it has to be taken out. But non-compulsory, they are not compelled. And also give examples of compulsory and non-compulsory insurance for you to get marks. Explain the advantages of insurance contract, which we have done. The 2 transfers and the 3 protect. You're getting 10 marks for that. Then discuss 3 principles of insurance. Remember, it's 3. There are actually 4. But here, examiner wants you to give 3 principles. And usually, if it's 3 principles, it can be 4, 8, 12. It can be 6 marks or 18 marks if it's 6, 6, 6. So you need to know that principles of indemnification, principles of security, principles of insurable interest, principle of utmost good faith, and explain like we did. Advise Mr. Funa on the importance of the compensation fund, COIDA, as a compulsory insurance. Here, please note, importance of COIDA as what? As compulsory insurance. So now you need to explain how COIDA benefits both the employer and the employee. Then you're getting marks for that. So it's easy for you to get marks. And remember how the essay is marked. Quickly, let's see. Introduction. The word introduction must be there. You must have 2 points, then we say 2 marks. Introduce your introduction. You can introduce it based on compulsory or non-compulsory, or you can give your introduction about the importance or any of these 4 sub-questions. Then now we're coming to body. Please don't write the word body, it's not required. Then that will be your point number 1. Your point number 2, what is it distinguish between compulsory? Then your heading, you will say distinction between compulsory and compulsory. Then you write your differences between compulsory. And this verb, distinguish, means that the difference must be clear, but they don't have to link. So you can, for an example, you can say compulsory, it is required by law. Non-compulsory, you give an example, you say fire and theft. You can be marked. The difference are clear, but they don't link because of the verb distinguish. Where are they supposed to link? Only when examiners use the verb tabulate or compare. Then the difference must be clear and they must link. But when the verb distinguish or differentiate, they don't have to be clear. The difference must be clear but not link. Right? Let's look at the third one. Third one is discuss the advantages. So your heading you must write. It's important to write the heading. You're getting marks for that. Just to write the heading advantages of insurance, right? And then 4, what is this? Discuss the principle. So you write principles of insurance before you can even start outlining and discussing them. The last one you'll say importance of COIDA. Then you'll say importance of COIDA, and then the last one will be your conclusion. So how are you going to be marked now? So you've got the structure of the essay as is in the question paper. So you are going to get L and layout. So it will be your lasso. Facts. That's how we mark you. Let's say here you got 2 marks, and here you got 6 marks, and under advantage you got 8 marks. Under principle you've got 14 marks. Under importance you've got 4 marks. So we're going to add all this, and when we add, let's say it's 38 marks. So we'll say facts 38, but we won't write 38 now. Why? Because we won't write 38 because 32 is maximum. So we'll say 32 max, meaning that you have reached the maximum mark allocation for this essay 32. So you've got 4 subheadings to benefit you in case you don't know the other subheadings, but you can at least get better marks in 2 for you to get 32. L2, where is this 2 marks? This 2 marks is for layout, right? These 2 marks is for layout, for introduction, and for your conclusion, for writing the word conclusion and something underneath, and for writing the word introduction and something underneath, you're getting 2. But you are not getting marks if the word introduction and conclusion, it's not written. Even though you have your introduction, you have your conclusion, but if there's nothing written, no marks. The word introduction must be written. And avoid writing intro. Please write it in full. What is intro? Write introduction. And don't say conclude, write in full conclusion. Then analysis. We're going to give you 1 mark for writing the subheading. You've already written 1, 2, 3, 4. You've got 4 subheadings. Therefore, you're getting 1 mark. And then for obtaining 16 marks and more, you're getting another mark. So another mark for analysis will be 4 of 16 marks or more. Therefore, it will be now 2. The synthesis, you are getting 2 marks because whatever you have written, it's relevant to the topic that has been asked. And for originality, if you give examples like COVID-19, the example that I gave on UIF under UIF, that for claiming. So then you're able to say COVID-19 employees were paid for UIF because of the lockdown. That's originality, recent example of what is happening in the country now. Let us now recap. Today's lesson covered what? Non-compulsory insurance. We did the meaning of non-compulsory insurance. Let me now, and also we did insurance concept, which still fall under non-compulsory insurance. We did the principles of insurance and the importance of insurance, which still fall under non-compulsory insurance. right? And we did the importance of insurance. All these three, 1, 2, 3, form part of non-compulsory insurance. Then we've done types of compulsory insurance, which we've done 3, right? We did our UIF, we did our COIDA, with all those 3. And then benefits of UIF, all the 5 types. So Lena, what I'm saying is that this brings us to the end of this lesson. The topic insurance is actually an easier topic when compared to other topics. So if you understood it very well, it's easy. If you might be lucky if it's asked in examiners decide to ask it in an essay question, then it's easy for you to obtain better mark, 40 marks in essay. But if it's asked in section B, your 20 marks or your 40 marks, you can still get it. So insurance, please ensure that you understand the concept. And remember the word specified event, premium, insurer, insured. Do not confuse the meaning of the insurer and the insured. And good luck, everything of the best. I know you'll make it because it is practical. And if you want to research further, you can Google or visit any businesses if you are allowed to visit, just to ask more about difference between insurance and assurance and the products and insurable risk and non-insurable risk. Everything of the best. Thank you.